listen-only mode.
All right, good afternoon, everyone. My name is Joe Bacella, Director of Client Success here at Chaikin Analytics, and I'd like to welcome you to our presentation of Trade Options Like an Expert. Presenting today is Marc Chaikin, founder and CEO of Chaikin Analytics, along with Tony Zhang, co-founder of Options Play. As a reminder, this webinar is being recorded, and a copy of which will be sent to everyone who has registered. Please submit your questions throughout the webinar using the GoToWebinar chat window. Now, to get us started, here's the founder of Chaikin Money Flow and the fundamentally driven power gauge rating, Marc Chaikin.
Thank you, Joe. Thank you, Tony, and welcome everybody. In today's webinar, we're going to show you how to trade options like a pro in volatile markets, and we've certainly been in a volatile environment. I think everybody will agree to that. So I'll start by introducing myself. Marc Chaikin, 50 years on Wall Street, lived through 10 bear markets. Doesn't look like that's going to be relevant as the S&P made a new all-time high today. And after the close, Alcoa, with a bullish power gauge rating and a positive earnings alert, reported better than expected earnings, trading about 8% higher in the aftermarket. For 45 years, I've been using technical analysis with my individual clients and my institutional clients, combining it with fundamental analysis because the big institutions use fundamentals to drive their investment decisions. Along the way, I've been mentored by some of the smartest and most successful institutional investors, colleagues of mine and clients. What's relevant to today's presentation is that what I learned from these successful investors is embodied in the Chaikin Power Gauge rating that we're going to talk about today. It's the centerpiece of everything we do at Chaikin. It's been integrated into our options play module, and it's the culmination of my life's work, so I'm very proud of it, and it's been helping people make money now for 5.5 years. Tony Zhang, who you'll meet in a moment, is head of product strategy for Options Play. He's also their chief idea generator. He's led the development of the Options Play suite, which I have a great deal of respect for. He was with Gain Capital for 7 years and basically started Options Play. And Tony, I'm going to let you explain why you started Options Play.
Thanks, Marc. Thanks, everyone, for joining. When we started Options Play about 3.5 years ago, we really set out with one goal in mind, and that was to make options accessible to everyone, not just someone who has an intimate knowledge of options in order to be able to use and utilize the options market. So what we way so that everyone can view option strategies in a way that is intuitive and allows someone who even knows really nothing about options to still be able to play around and explore the different options that are available and compare it to strategies that they do understand, such as buying and selling stock. So that's really the genesis of Options Play, and we call Options Play options for the rest of us because we're designing a tool to help everyone to be able to utilize the power of options through Options Play. And recently, we've had some success in the broker-dealer side as well as in the wealth management side, where that Merrill Edge is now a client of ours, and Raymond James Advisors now have access to Options Play through their client center. So those are some of the recent successes that we've had at Options Play. And now, of course, you can also access Options Play free of charge through your Chaikin Analytics app.
Well, thank you for that, Tony. And when I first saw Options Play about a year ago, I said, wow, if I were to build an options app, this would have been it. So rather than rolling this out for the Chaikin community, we integrated it, and the integration has been widely acclaimed and well received. So we're going to see some of the benefits of that for the Chaikin community, and if you're new to Chaikin, hopefully we can make some sense out of this for you as well. Now, we've been fortunate. I think actually Options Play has been featured in the media, but in addition to all the great media exposure we've had, about 3 months ago, Barron's wrote up Chaikin Analytics as one of the top 2 quantitative sites on Wall Street. And we're very proud of that because Barron's is a really credible source and doesn't throw praise around easily. Now, we know from the customer sessions and onboarding and all the educational work and feedback that we get and encourage that Brexit and volatility have really spooked people. And if you fall into that category, type a big Y in the question box and don't be shy, because everybody's been spooked by the volatility and the uncertainties surrounding Brexit. So since I'm seeing a lot of Ys in the question box and knowing how well received our new approach to the start of our webinars has been, I want to focus on the stock market and where it's headed and recap why we've been bullish in the main since mid-February. We give you 3 proprietary tools to know where the market's headed. We encourage you to check the Chaikin money flow for the SPY, which is the S&P 500 large cap ETF. It's the most actively traded ETF and actually most actively traded instrument. And the reason is that institutions and individuals use it to make market bets when things are changing or when they don't want to pick individual stocks. So the money flow in the Spider, Chaikin money flow, has been around for 35 years. It's available on every one of your online trading platforms, stockcharts.com. It's really important to know that institutional investors can leave footprints in the market. Money flow, which looks back over 21 days of buying and selling, can identify those footprints. Secondly, we have something we call the power bar. Power bar for any list index ETF in the system, whether you create it or we created it for you. We have a power bar that tells you the number of stocks with a bullish power gauge rating, which means that the fundamentals are aligned favorably, versus bearish ratings. And then finally, something very special that we do at Chaikin, we look at the equal weighted S&P. The Guggenheim equal weighted S&P symbol is RSP, to see whether the average stock in the S&P is outperforming the famous FANG stocks, Facebook, Amazon, Netflix, and Google, because as you know, the S&P 500 index is capitalization weighted. Now, what does that mean for the average investor? It means if you're not in those big cap stocks, as happened in 2015, where they drove the S&P, you didn't really participate, and if you were in the smaller stocks in the S&P, you could have lost a lot of money. So here's what the market looked like as of last night's close, heading into today. And by the way, we're going to give you an advanced look of our new intraday updating bar and intraday chart, which we're going to roll out at the end of July. But this chart is our current chart from our desktop app. The power bar on the top is strong. There are twice as many stocks with bullish versus bearish power gauge ratings heading into today. Chaikin money flow in the middle of the chart was all green from early January until that 2-day Brexit panic sell-off of 5.6%. As you can see on the chart, we finally broke out above resistance at 2100, and today the market closed at a new all-time high on the S&P, 2137.16, 0.4%. Earlier in the day, it was up 0.5%, actually moved higher. A little bit of profit taking as we made a new high. People are being a little cautious here, which encourages me that there's more to go on the upside. Now, I have a green arrow there on the Brexit 2-day sell-off. Why? Because volatile markets create opportunities. The market got oversold. The average stock in the S&P, as measured by the relative strength of the RSP to the SPY, has been outperforming since mid-March, reversing a 12-month downtrend. When the average stock in the S&P is underperforming, the market tends to run into resistance. Why? Because it's just 4 to 10 stocks pushing the market. On the other hand, when the average stock is outperforming, you've got a robust environment. So I know a lot of people look at technical indicators like the McClellan oscillator. You can get the same information by looking at the relative strength of the RSP versus the SPY. Now, another index ETF that people trade actively is the Russell 2000. How many of you are familiar with the Russell 2000? If you are, or if you trade it, type a Y in the question box. Now, the reason the Russell 2000 is important is because Russell 2000 is outperforming the SPY. And how do we know that? Because our relative strength indicator is green and not red, as it has been since late May. It means that the market is in a more confident posture. Psychology is typically better when small cap stocks are outperforming. And when I did this chart early today, the Russell 2000, which has been outperforming the market and has a better power bar rating, almost a 3-to-1 ratio versus 2-to-1 in the S&P, was up 1.1%. It closed there up almost 3 times what the S&P was. So positive money flow up near that upper volatility band, which in our new real-time charts you'll see, and outperforming the S&P. This is a bullish environment. Don't believe what you're seeing on CNBC. Strong tech earnings after the close. Seagate sees strong fourth quarter results. Alcoa up 6%. We're heading into earnings season. Brexit is behind us. Still there uncertainties. The Fed's not going to raise rates in 2016. They pretty much told you that. So now the market's focused on second quarter earnings. Analysts are very pessimistic heading into second quarter earnings season. That's a good thing. And now we're seeing better than expected earnings reports coming out. This is all good for the stock market. We think it's going higher. There's always profit taking around new highs, but boy, have we weathered that well. Now, let's look at something that Warren Buffett said. And it really relates to what we just saw with the Brexit panic. Investors should be fearful when others are greedy, and greedy only when others are fearful. Now, if what we saw after the Brexit vote was not fear and panic, I've never seen it. And it sure was scary for a lot of people. We told people in our weekly market insights, keep cool, don't panic. And sure enough, the market has rebounded and rebounded. Now, here was a way that you could have used Chaikin. This is sort of an advanced preview of our Chaikin charts with the power gauge on the bottom, relative strength right above it, and the Chaikin money flow. Now, the power gauge, as you'll see in a moment, summarizes 20 factors, 85% fundamental. It does heavy lifting. So if you were following the power gauge rating, you might have been watching F5 Networks, FFIV, which spiked up on takeover rumors. Bullish power gauge, outperforming the market, Chaikin money flow positive. How do you take advantage of volatility? When it broke down to the lower volatility band after the Brexit vote, buying opportunity, relative strength buy. That came in today. But you could have bought it and take advantage of volatility, probably great options trade at that point when the stock traded back down under 110 from 125, trading at 117 today. Now, here's an example of a small cap stock, which is what the IWM Russell 2000 consists of, quad graphics. Why do I feature quad graphics? Well, look at the Chaikin money flow, all green since late January. Typically, Chaikin money flow, as it did in the September-January period, fluctuates from red to green. So here's a stock that was in a downtrend, bottomed out, gave some buy signals. We have buy signals and sell signals in Chaikin Analytics. And where you see that green arrow, my wife Sandy, who also does lectures, her tagline is from novice to knowledgeable. Years ago, she had never traded a stock, and now she beats the market consistently because she believes in the methodology we're going to teach you today. And when quad graphics, which she was following, sold down to the 21-day average and got oversold. She stepped in and bought it at around 21, trading at 24.81 today. It's a pretty neat 15% gain in less than 2 weeks. Now, in today's webinar, we're going to teach you how to trade options like an expert. To do that, you need a directional edge. You need to know where the stock is going. Tony will speak to that in a moment. To show you how to save time and simplify options trading quickly and easily find the best option candidates. You do this by choosing strategies using the Chaikin power gauge rating and options play probability-based ideas. And as a special bonus, since we're now heading right into the thick of earnings season with Alcoa's report after the close, and reiterating again, better than expected earnings. Alcoa has a bullish power gauge rating and had a positive earnings alert in our new earnings module. So we're going to show you how to use earnings season to turbocharge your options trading. Really important not to be spooked by the volatility in earnings season. So we talked about saving time. Time is really our most precious commodity. There isn't enough time to do everything we want to do in life. And I did a one-on-one session with one of our new subscribers, and he started talking about Greeks and delta and implied volatility, and I said, do you have the time to do that? How many of you out there have the time to find the right stocks, research the options, check the options chain, do the deltas, the implied volatility calculations? I don't think you do. If you're overwhelmed by this, type a big O into the question box, please, because that'll tell me that options play is for you. And I see that we have a lot of people who just are either overwhelmed by it, don't have the time, or don't understand it. And that's the message we've been getting, which is why we integrated options play. Now, the biggest problem we face as investors is information overload. In our personalized Facebook, Twitter, LinkedIn, Snapchat, Instagram, you name it, too much information, email as well. On the investment side, CNBC 24/7, all these differing opinions, scare headlines, so many websites, too little time. So what's our answer to information overload? Well, our solution is Chaikin Analytics for iPad and desktop. And for people who are options oriented, we integrated options play into Chaikin Analytics. Now, Tony, could you just speak briefly to what I'm showing on the screen, just maybe a brief overview of what you're going to dig into in a few minutes?
Yeah, so what I'm going to be able to show you guys is how you can use the Chaikin power gauge in conjunction with options play to use the power gauge to find the directional edge, whether you're bullish or bearish on a particular stock. Once you have that sentiment on an underlying stock, how do you actually parlay that into an option strategy? So what options play does, as you can see on your screen, is it automatically presents strategies to users depending on whether you're looking at bullish ideas, bearish ideas, or even income ideas on any underlying stock instantly, and giving you the tools to fine-tune each one of those three strategies is what we're going to dive into in a little bit with a live example.
And I know from using options play to generate ideas for our webinars and for our clients, and Joe Bocello has done the same thing, that these 5 panels that Tony's going to show you when we pass the screen to him really do give you something that's critical to making money in options.
Yeah, and I'm going to show everyone how.
Yeah. Simplicity, isn't that what it's all about, Tony?
Absolutely, and this is a tool that I use every single day myself, including the Chaikin power gauge to scan for stocks that I'm interested in looking at bullish and bearish ideas. Once I find those stocks, I use options play to find those option strategies, and that's what we're going to show you today.
Yeah, so how does Chaikin Analytics lead to larger options profits? We give you that directional edge by combining fundamentals, which is what the institutional investors base their decisions on, with technicals. And many institutions look at technicals but rely on fundamentals as their rock, into a quantitative model and then providing buy and sell signals for better entries and exits, which are so critical in options trading. We give you a directional edge. Now, volatile markets demand that you be disciplined, that you have a disciplined methodology. And this pyramid encapsulates our very simple methodology. It's what my wife Sandy uses every day, 15 minutes a day, to manage her 401k plan. She finds both swing trades and long-term trades, and we're trying to ease her into the options game because I think she'd be a natural at it. Top of the pyramid, the power gauge rating summarizes the fundamentals, as you'll see in 1 second. Bottom of the pyramid, the bedrock, two only technical indicators, Chaikin money flow and Chaikin relative strength. Now, options play also measures relative momentum in a 1 month and a 6 month time frame work, and that is a complement to our relative strength. And then right in the middle, those buy and sell signals we've been talking about. Now, the power gauge rating is very simple visually. It looks like the gas gauge on your car. And I've said many times on these webinars, because we do about 6 of these a month, that the power gauge rating is like a Chevrolet with a Ferrari engine under the hood. And that means don't confuse simple with simplistic. It's powerful. The reason I say that is that the 20 factors that make up the Chaikin power gauge rating, 85% fundamental, only 15% technical, even though most of you know me for the Chaikin money flow, represent the factors distilled down from 200 that institutional investors look at every day. Financial metrics, that's what Warren Buffett and value investors look at. Earnings are what we're all about now for the next 6 weeks during earnings season. Jim Cramer's going to focus on this. Fast money, they'll focus on it, and so do aggressive investors and hedge funds. So I've boxed earnings surprise. It's one of the things that I learned from a colleague at Drexel Burnham who had the best quantitative database on Wall Street. He did the seminal research in earnings surprise. Now, earnings surprises happen when a company either surprises Wall Street by reporting better than expected earnings or disappoints. And Wall Street's pretty unforgiving. You disappoint Wall Street, you pay a price. And so we're seeing now Seagate, Alcoa trading higher, after Tesla trading lower because there's some negative news where we've got Tesla in our deck. When a company reports earnings surprises, and by the way, they come in bunches. As you'll see in a minute, there's never just one earnings surprise. They come in bunches, both on the upside and the downside. When a company surprises to the upside, analysts start raising their estimates. Analyst estimate revisions are the single biggest short-term driver of stock price movement. It's been documented by Zacks Investment Research, in the old days by Drexel Burnham. So very important to realize that this model is eclectic. It's not a value model or a growth model or a dividend model. It takes all of these factors into account. That's why it's worked so well in all the volatility we've experienced over the last year and a half, and in that sort of steady Eddie bull market that we've had since 2009 with a few interruptions. So how is the power gauge done? Well, just briefly, we use the Russell 3000 as our reference point. The average very bullish stock, 428 of them at any given point in time, have averaged a 20% annualized gain. The average very bearish stock has been down 1% since 1999, 16-year time window, and that's after a 7-year bull market. But 2015 was very challenging for you. How many of you experienced difficulty making money in 2015? If you did, you're not alone, and let's give everybody a lot of love here because it was a tough year to make money unless you had the power gauge rating as your guide. Now, is it right all the time? Absolutely not. But in 2015, the average very bearish stock in the Russell 3000 was down 17%. The S&P was actually up fractionally because of Amazon, Facebook, Netflix, and Google. But if you were in energy stocks, if you were in rails, if you were in cloud computing stocks, if you were in social media stocks, you could darn well have experienced sleepless nights and big losses in your trading and your 401k plan. The average very bullish stock was down only 1% in 2015. It's that ability to capture that between positive potential and negative potential, to know which stocks are likely to outperform and report positive earnings surprises. That's a bullish power gauge syndrome. Which stocks are likely to blow up because of negative earnings surprises or bad news like Tesla and Netflix today, both of which we feature in the deck. Now, two other proof points and we'll get on to the meat of the presentation. We're partnering with Nasdaq. We've created Nasdaq Chaikin indexes 2.5 years ago. All three of the indexes, large cap, small cap, and dividends, are outperforming their benchmarks. And there's now real money being invested in the Chaikin methodology. First Trust Portfolios, the largest creator of unit investment trusts that they market through advisors at Morgan Stanley, UBS, Raymond James, Merrill Lynch, has created the Chaikin Low Beta Growth Unit Investment Trust. The first series was rolled out on December 7th. 20 stocks equally weighted using the power gauge as the final filter. I've boxed the performance of that. This is a buy and hold portfolio. It's going to stay in place for 15 months from December 7th. As of Friday's close, that portfolio was up 6.41% versus the S&P up 3.9%. That's 250 basis points in 6 months. That's a big deal when you're dealing with a large cap index. $50 million being invested based on the Chaikin Power Gauge rating. All three of the series unit investment trusts have been outperforming their benchmarks since inception. And they're going to continue to roll these out. So how can you make money with the Chaikin Power Gauge rating? Well, the first thing is to learn this pattern we call classic Chaikin bull. Strong power gauge rating, meaning the fundamental potential is there. A stock that's outperforming the market, meaning that your fundamental view is being validated, and strong Chaikin money flow telling you that the institutions are buying the stock. Now, here's a chart of United Health Group, largest healthcare provider in America, that illustrates everything that we're going to be talking about on today's webinar. At the bottom is the power gauge rating. It was neutral leading into the February low. Stock was in a basing phase. Sometimes we use Wyckoff idealized charts to illustrate this, but we've got so much to do it. Mid-February, United Health broke out of that base. Money flow had been positive even before that. How do we know it? It's green, not red. Very simple, it's visual. And the stock had been outperforming the market since mid-January. Now, we added new earnings functionality. So at the top of the screen, you see that the next earnings report on United Health is next Tuesday, July 19th. And we've got a red or green exclamation point. In this case, green exclamation point means that our earnings alert filter is positive. So analysts are raising their estimates. And now look on the chart itself for the four icons that say EPS. Dotted line up to the day that earnings were reported for the last 4 quarters, color-coded. So what do you know from this chart? United Health, in each of the last 4 quarters, has reported a positive earnings surprise. This is important information because when they report on July 19th, the odds are they'll report another positive earnings surprise. They've actually had 8 quarters in a row of positive earnings surprises. This stock made a new high well ahead of the market back in June, and then again in July just recently. It's what we call the ideal setup, and we'll show you another Warren Buffett quote in a minute. It's also in each of the first 3 Chaikin Low Beta Unit Investment Trusts. So the computer picked it based on a set of rules. We're teaching you a bottom-up methodology to find winning stocks and winning options trades. First Trust Portfolio is what's known as top-down. But based on the Brexit volatility, you had what we call the ideal setup. On that 2-day pullback, we got an oversold buy signal. Now what is that? This is on our website. fully disclosed whether you're a subscriber or a visitor. All 6 of our buy and sell signals are explained. This is simple. We're giving you a directional edge. The power gauge is bullish. You see that at the bottom of the chart. That's a requirement for this signal. Stock gets oversold. Our overbought, oversold indicator is a cross between an MACD and a stochastic. And you make a new 8-day low. Thank you, Larry Williams. That's who I learned that from. It's a nice, neat little pattern. If you're bullish on a stock and it makes a new 8-day low, unless the market is completely out of control, that's a great buying opportunity. In this case, when the Brexit selling occurred, we didn't even break that May low, whereas in the market we did. So very strong, we call it the ideal setup. Now, classic bear, Kinder Morgan. Been using this for over a year. Prior to that, it was Wynn Resorts. Power gauge has been bearish for over a year. It's just now turned neutral, and the stock is starting to outperform the market. That's a good thing. But in spite of the fact that Warren Buffett is buying the stock and other hedge funds, it still can't break out above that 1920 level, which would be required to really get bullish on this stock. But look at these opportunities in the classic bear, which means bearish power gauge rating,
Hey, Marc.
underperforming the market. Yeah.
On the screen, we're still looking at the stock UNH.
Okay, so how is that?
Let's see. Just trying to see. Yeah, see a few people are chatting in saying that they're not seeing it. UNH is still on the page, not Kinder Morgan.
All right, what do we want to do here, Joe? Do we want to
try moving back 1 or 2 slides? It might just be a little bit of a lag.
No, it's not.
Okay.
What are you seeing now?
Still have UNH on the screen.
Well, we're stuck, so give me a quick fix so we don't...
We'll be in just a second.
Do you want me to sign out and log back in again, or will that mess things up?
No, I don't think we'll have to go to that extent. Chris is going to head over right now to try getting that resolved. I see a few people chatting in saying that they're still seeing UNH as well.
Did that show up?
Let's see. No change yet.
Fast. What do you do? No. Joe, is anybody seeing Kinder Morgan now? Please let Joe know.
Still seeing a lot of no's go through. All right, bear with me for just a second. I'm going to try something real quick.
Joe, if I sign out and back in again, will that change anything?
Try this. I just made myself the presenter, so I just go ahead and try and show on your screen again here.
Right, you've got to make me the presenter then.
Let's see. Bear with me for just a moment. All right, there you go. I'm seeing Kinder Morgan now, Mark.
Okay, so classic bear, power gauge is bearish, many opportunities to sell the stock. Apologies for the technical glitch. It's 90 degrees here in Philadelphia. Maybe Comcast is on overload. And this is a stock you didn't want to own in 2015. The market agreed with the model, many opportunities to sell it, buy options, put spreads, you name it. Here's a current version of a classic bear in the making. McDonald's. Can everybody see McDonald's on the screen now? Joe, how about you?
Yes, yeah, we see it. I think we're good to go from here.
And in a couple of minutes, Tony's going to talk about put strategies in McDonald's. But why is this a classic bear? Money flow is bearish. Actually, when you made the new high in McDonald's back here in May, look at the Chaikin money flow. It was red, not green. That is a signal, a tip that we've been teaching institutional investors for over 30 years, since 1985. When a stock makes a new high, Chaikin money flow should make a new high. Right now we have McDonald's in a downtrend, bearish power gauge, underperforming the market with negative Chaikin money flow. You want to sell rallies in McDonald's. Now, how do you find these bullish and bearish stocks? We have hot lists. Power gauge hot lists, featured bulls and bears, whole series of different ways, including our screener, which we don't have time to get into today, to find bullish or bearish stocks. Now, we have two patterns that we've identified. We're grouping them here because they're so important. I want you to take these away and indelibly remember them. Dynamic duo is the combination of the Chaikin power gauge rating and Chaikin relative strength. It finds big winners and losers. Now, you can make money in a momentum stock that doesn't have a bullish power gauge rating on the upside if the relative strength is strong. That's okay, but realize that you're on a high wire without a safety net if the fundamentals are not supporting it. So, two examples of recent stocks that are broken down are Tesla and Netflix, where the fundamentals are changing, but they had big moves to the upside, as we'll see, without a bullish power gauge rating. Now, the second pattern is what we call personality changes. They're really the key to making and keeping profits, because when a stock changes personality, like Tesla or Netflix, or as we'll see in a minute, an aerospace stock to the upside, you need to know that, because we tend to be stubborn and set in our ways, and that's the worst thing you can do in Wall Street. As Marty Zweig, my good friend who sadly passed away prematurely, way too young, said, "The tape is my guide. I never fight the tape." Well, that's what we're talking about when we're talking about spotting personality changes. So here is an aerospace stock, Huntington Inglis. Could you ask for more in terms of a fabulous upward stock from 120 all the way up to 175? Power gauge turned bullish in late October, outperforming the market. There's your bullish personality change. Can everybody see that on the left of the chart? It went from underperforming, so relative strength was red, to outperforming. That's what we call a personality change. We look back over 26 weeks, we smooth it. You could get these numbers in Investors Business Daily from 1 to 99, but that's just information overload all over again. Too much information. Color, easiest way to transmit information according to the Media Lab at MIT. And look at the bullish Chaikin money flow. And you've had multiple opportunities, including the Brexit sell-off, just like with United Health, when the stock got oversold and money flow stayed green. We saw it here, we saw it here in February, so February, May, and then again in June. And Tony, I think you've got a, I'm going to try and get you teed up here by giving you the pointer, because I know you've got some options play examples here to share with everybody. So I'm going to give you the mouse and the keyboard and have a go at it.
Yeah.
No, you're going to let Tony share his screen, correct?
Yeah, let me go and pull up Tony's screen right now. All right, take it away, Tony.
All right, thanks, Mark. So what we just showed you was how to use the power gauge to quickly get that directional edge on a specific stock. So we looked at McDonald's, we looked at a few other examples, but right now what I'm going to key into is McDonald's. So we've looked at the stock, you know, we see this personality change from bullish to bearish back in mid-May. The power gauge rating is very bearish. We're going to be looking at is bearish strategies on McDonald's. Now, before I launch Options Play and show you how you can use this to find those bearish strategies on McDonald's, what I want to do is point out kind of what we were working with prior to Options Play. So if, let's say, you were using the power gauge rating and you saw that McDonald's was bearish and you wanted to take a look at how do I take advantage of a move in McDonald's lower, you'd traditionally be looking at a page that looks like this, with a bunch of option chains that show you calls and puts with a bunch of numbers on it. And the problem with this screen is, unless you are a very or have lots of experience trading options, it might be difficult for you to decide which rank which expiration to choose, whether to choose calls or puts or a combination of calls or puts, let alone just by staring at this page, even if you knew how to trade options, all the information you needed to make a decision as to whether or not you wanted to buy a 1 month call or I'm sorry, a 1 month put or a 2 month put, all that information is not quite available to you on this chain. You typically would still have to structure a trade first to be able to see the analytics to decide, is this the trade for me? So what we've done in Options Play is we've taken a whole different approach. As opposed to having to look at a page like this and choose a strategy first before you can see any analytics, what we've designed is a way to quickly show you option strategies without you having to do anything other than say, show me some option strategies. So clicking on the options button up here will launch Options Play on any symbol, and it's sensitive, so when you launch options for McDonald's, it will bring you up strategies for McDonald's. Now, one of the things you're going to notice right off the bat is when you have McDonald's up, you're presented with 3 strategies or 3 options. You have I'm bullish on McDonald's, I'm bearish on McDonald's, or income strategies. Now, we'll always default to what the power gauge rating is saying. So, for example, in this particular case, because McDonald's has a very bearish power gauge rating, we're going to be showing you 3 bearish strategies. Now, before I get into this real quick, I'm going to show everyone a quick thing at the very bottom, especially for those of you who are new to Options Play and have never used this tool. There's a guide button at the very bottom. I highly recommend that if this is your first time using this tool, click on the guide. It'll give you snippets on what's currently going on with this particular screen. So if there's anything on the screen that you have questions about, just pull up the guide, hover your mouse over the portion of the screen that you're unsure of, and it'll give you a quick summary as to what you're looking at. So once you launch Options Play, as you can see, instead of seeing the traditional chains page, what you're already presented with is 3 strategies based on the viewpoint that you have. So in this particular case, we're bearish on McDonald's, so what we're presented with is 3 bearish strategies without you having to choose an expiration or a strike price or even a specific strategy. So we're always going to present 3 strategies to you as a starting point for any given stock. So in this particular case, we're looking at bearish strategies in McDonald's. So we're going to show you what it looks like if you were to short the stock, which is the only strategy available to you if you're only trading stock, meaning if you're not looking at options and you have a bearish view on a particular stock, your only option is to short the stock. And that's not always an option that's available to everyone because it requires a margin account, requires substantial amounts of capital to short a stock. So that's something that not everyone even has access to, versus what we also show you is a put strategy. This is the simplest of option strategies, and we're showing you a buying an at-the-money put. So McDonald's is trading at around 123 right now, so we're showing you buying you an August 26, 123 put. And lastly, we have a put vertical. For those of you who have traded some options, this is a more complex strategy that gives you it lowers your risk a little bit by selling a lower put against the 123 put that we're buying. And I'll show you a little bit in terms of how that's structured for those of you who are new to options. Now, when you look at these 3 options, it's presented to you in a way, like Marc was saying, what we try to do is make everything very intuitive using red and green so that it's very clear to you, and without knowing a lot about options, being able to quickly decipher which one of these 3 strategies might be suitable for you. So as you can see right off the bat, you are presented with 3 strategies, and they all have Options Play scores, of which the one on the right, 123, is the absolute highest with a check mark next to it. Now, most platforms won't give you a breakdown like this. Most trading platforms, as far as options, will give you a look that looks something like this, where it breaks down the cost of each strategy, the max reward, max risk, probability of profit for some of the more advanced platforms that have probability analysis, break-even prices, and days to expiration. Now, this is all really good information and information you need in order to make a decision. However, it's very difficult to compare 3 strategies side by side looking at these numbers and say which one's best, because none of these numbers are kind of on a level playing field, because you can't really quite compare a short stock to an option strategy, and it's very difficult to compare an option strategy that has max reward of $11,945 which only really happens if McDonald's goes to zero in the next 46 days. That's unlikely to happen, versus something that has a max reward of only $526. How do you actually compare all of these things side by side and make an educated decision as to which strategy is best for you? And we realized that, and that's why we created the options play score. Because what we're doing is we're taking all that information we just showed you, condensed it, and made it normalized so that you can compare multiple strategies side by side on a level playing field, so that you can easily gauge, just by looking at 3 strategies, which strategy gives you the best risk-reward ratio just by looking at the options play score. Now, I do want to point out that the options play score, as great as it is in helping you find the right option strategy in this particular case on McDonald's, the reality of options is that even though we have about 4,500 symbols that have options that you can trade on, a vast majority of them are not very liquid. Out of probably 200 to 300 symbols out of the S&P 500, the rest of the 4,500 symbols aren't very liquid. And the problem with it is when you're looking at the chains, it's very difficult to gauge how liquid an option is just by looking at the chains. So what we did is we created a tool that allows you to type in any symbol. And I'm just giving you an example of a smaller cap stock that, so for example, you might pull up a stock like this that has a very bullish power gauge rating, but as you can see, we didn't even find a call vertical for you, and the call has a very low score of 56. This is just telling you, hey, if you were interested in this particular stock and you think the stock is bullish, perhaps the option is not the way to go. So I do want to point out that even though there are 4,500 symbols that you can trade options on, a vast majority of them are not very liquid. Use the options play score to help you gauge that. If you pull up a symbol and everything has very low scores, that means you may want to just stay away from the option. So we're not just here to help you find the best trade, we're also helping you avoid bad ones, which is a very important piece of options trading, especially if you're new, is to don't go into some of the options that are less liquid, and the options play score will make that very apparent to you before you have to do any more research or waste any time on looking at an options chain for a symbol that may not be very liquid. So once we've kind of...
Tony, that's very compatible with Chaikin, because that's the whole concept behind the power gauge rating. If you can avoid the losing stocks, focus on the winners, and just weed out 1 or 2 stocks every month from your long list or your portfolio, you're putting the odds in your favor in the same way that when options play says there's no really good options trade here. It's just adding to the probabilities that you're going to be successful in the trades that you do take.
Exactly. Exactly. So use the options play score to also help you from making the bad trades. It is essential in options trading is to avoid trading less liquid options, especially if you're new to this. Just stick to the liquid names, the ones that have clear directional plays using the Chaikin power gauge, whether it's bullish and bearish, and then in conjunction with the options play widget, use the ones that have higher options play scores, because these are usually the most liquid names. These are the names that you can easily get in and out of the trades of. So once you have these 3 strategies presented to you, and we'll go through another example on the bullish side, but we'll always present to you 3 strategies, and you can think of these as starting points. So especially for those of you who are new, use these 3 strategies as your starting point in determining whether or not an option strategy is suitable for you. And we have these tools on the bottom that are designed to help you fine-tune each one of these 3 strategies. And I'm just going to go through this real quick so that we can get to the other examples. But right off the bat, we have a P&L simulator. This is a very straightforward tool to help you simulate any given scenario you may have on the underlying stock to quickly see what the performance of each one of these 3 strategies side by side is. So if, let's say, we're looking at McDonald's, it's currently trading around 121. As we can see, and Marc may talk about this, the lower band is just around 115 right now. So if, let's say, we think the stock's going to go down to about 115, we can easily see which one of these 3 strategies gives us the highest return. As you can see, the strategy here on the right, if the stock goes down to 115 by our expiration date, which is August 26th, we're going to receive 191% return on our call vertical. And even if you don't really know what a call vertical is, that's okay. This tool is designed to help you learn about this. And we have a plain English tab here that will actually explain each one of these three strategies to you in plain English. So especially if you're new to options trading, use the plain English tab to learn a bit more about each one of these three strategies and what the stock needs to do in order for these strategies to profit.
Now, Tony, for people who are more experienced, options play also gives them the ability to have a field day by customizing. Isn't that right?
Absolutely, and I'm going to get into that in 1 second. Before I do that, I just want to talk a little about the options play score, because we do get a lot of questions regarding that. You know, how does that calculated? What is the methodology? And what we're really looking at is how each one of these three strategies are performing within a given specified range. And this range has no directional bias, so we're assuming that this stock could go up or go down. We're just looking at an equal weighted probability up or down and saying, what is the true risk to reward on the different scenarios that could play out on this particular stock. So as you can see on your P&L graph, you have green, which represents potential reward on a particular strategy, and then you have red, which is potential risk. And once we weight the amount of green versus the amount of red, we can get a feel for what the true risk to reward is, and that's really what the options play score is telling you. Now, by default, we're assuming that the stock is going to trade within a fairly normal range. Here, we're saying that it'll trade somewhere between 114 and 129, with this stock currently at 123. But the user can also have more. If, let's say, you have earnings coming up and you expect the range to trade in a little wider range, you can actually change these assumptions as where you think the stock will trade in, and we'll recalculate the score and tell you which strategy is best suited for you based on the new given range that you expect the stock to trade in. So if, let's say, I really expect a big move in McDonald's, now I can see now this strategy here in the middle, buying a put, gives me the best options play score. This is telling me that if I expect a big move to happen in this particular stock, I should probably be trading that middle strategy, the buying the put versus buying the put spread. Now, lastly, for those of you who are a bit more advanced, you can have a field day with modifying all of these also. So if you click on modify, first of all, what we do is we presented this in a way so that you can really play around with options without having to use the chains. And that is, you can move all the strikes up one, you can move all the strikes down one just by clicking left and right arrows, as opposed to having to use the drop downs or the chains to decide which strikes that you want to buy or sell. You can change the expirations, you can change the strikes, you can change the width. There's a whole slew of things that you can do with this to really change this strategy and play around with it until you get to the strategy that you're interested in taking a look at. Now, for those of you who are more advanced and are looking for the more complicated and more complex strategies, we have a strategy constructor that has about 45 different strategies that you can choose from. So if you're bearish on McDonald's and you want to look at what a short call vertical looks like, you can construct that and very quickly be able to compare different strategies side by side using the options play score. So with that, that was just a quick introduction on the options play widget using McDonald's. Mark, you want to go ahead and bring up a couple of more examples and we can go through those?
Well, I'd like to look at the HII, the Huntington
right.
English that we ended with, because if you follow that buy on Huntington English at about 158, it's now rallied to the upper volatility band, and what we've been suggesting to people in our option strategy educational sessions is you can leg into a buy right. A lot of people are writing options to generate income. So let's say you bought Huntington English on east of the last two buy signals, 150 and then 158. With the stock up here at 170, actually 174.72 today, you could actually write an at-the-money call, a 175 call. Now you have to be prepared, as we'll show in the next slide, to see the stock taken away from you. You have to be prepared to sell it at 175 plus the premium. But if you could just bring up what could be accomplished by writing an August 175 call. Now the stock's due to report earnings on August 4th. You can enhance the returns pretty dramatically. I can't see your screen, Tony, but you might just bring up the income strategy on HII and show how by writing an August call or a late July call, you can actually bring in a lot of income in case the stock is peaking up here at the upper band.
Absolutely. So just what I was saying before, every time you bring up the options play widget, you have three choices: I'm bullish, I'm bearish, or income. So for those of you who are looking for income strategies, specifically cover calls or short puts, click on income and you'll get a message that looks like this. Now in this particular case, Huntington, it says based on currently available options, we did not find an optimal call to sell. That's because currently we have earnings coming up. So for those of you who want to get more aggressive or are okay with selling cover calls into earnings, you can click here and actually view those strategies. So right off the bat, what you do is you enter the number of shares that you own. So if let's say you own 200 shares of this particular stock, you can even enter a cost basis. Now what we can do is we can look at how much premium can you bring in by selling. So Huntington's trading at 173. Marc wants to look at selling an August 175 call, which is the at the money call. As you can see, by doing that, if I own, well, let's change this to 100 shares so it's an even 100. So if I own 100 shares, what I'm actually bringing in is $480 of premium for every 100 shares that I own. What that translates into is about a 25% annualized return just by writing an at-the-money call. And the reason we're doing this, as Marc was saying before, is that this stock is a strong bullish stock. If I'm long the stock already at 145, 150, I've made a nice return. This could be another way to juice that return by adding an additional 25% annualized return and potentially selling my stock at 175. And because it's trading near its upper volatility band, we don't think the stock can go much higher from this in a short period of time. It might actually pull back a little. That 175 strike is a great strike to sell, and it brings in 25% annualized return. And you can use this income tab for any given underlying that you may have. So some of you may own the indexes. So for example, if let's say you own the IWM index, you can click on the income tab and very quickly see what are the possible cover call and also short put opportunities you have on any given stock. So you can type in any symbol, click on the income tab, and it will show you an optimal cover call or short put. Unless we're going into earning seasons like HIIs, you will get a message that looks like this. It just tells you, hey, based on currently available options, we don't think now is necessarily the best time to write a cover call, but you can still click on view aggressive strategies and perform your own analysis on either cover call or short put.
So that's just great, Tony. And Tony's going to be back when we look at some bullish strategies. So while Joe is giving me back control, I'll point out that Owens Corning and the very strong building products group had momentum breakout buys all through the spring. We have been on webinars over and over again where we've showed people how once you bought the stock and it's rallied to the upper band, you bought it on weakness, taking advantage of volatility like Brexit. When it gets to the upper band, sell that covered call. You could have done that 3 different times in Owens Corning. And the first 2 times, the stock pulled back and those calls expired worthless. So people who bought the stock at 47 with it now trading at 54, 55 have had 3 opportunities to take in anywhere from 1 3/4 to 3.5 points. And so in addition to the big gain in the stock, they have the opportunity to bring in income and by writing the cover calls, enhance their return. So I'd like to point out that when you sell a covered option, whether you do it at the same time you buy the stock or whether you leg into it by selling it later, you're limiting your upside to the strike price plus the premium you receive. So you write a covered call when you're happy to sell the stock at the strike price plus the premium. And if you're fortunate enough to see the option expire worthless, then you're going to enjoy what Jim D has enjoyed, a better night's sleep. We got this testimonial back in April. After getting hammered in the August 2015 correction, I decided to take advantage of what Chaikin really offers. That is a better night's sleep and some really impressive returns. Rather than swinging for the fences and striking out, I've learned to do what the system tells me and enjoy my 16% returns. Thanks to Marc, Joe, and the entire Chaikin team for giving me my confidence and a good night's sleep back. Jim D was selling covered calls. After buying the stock based on one of our signals in the power gauge, he'd either immediately sell a call or he'd let it rally a bit and then sell the call. So if Jim D can do it after really striking out, as he says it, you can do it as well. Now, let's look at the dynamic duo, which is what sort of section of the presentation we're in on the downside. Twitter. Bearish power gauge rating for over a year and a half, just now turned neutral. Stock was rallying. Do you want to buy it? Absolutely not. Dynamic duo has been weak, underperforming the market. Look at the money flow. The institutions continually sell the stock. And today, with the market up making new highs, earlier in the day, Twitter was down 2.5% because a major brokerage firm put out a sell recommendation on Twitter. So in spite of Donald Trump and his prolific use of Twitter, the stock is not in good, strong hands. And their business model is hurting. And just because LinkedIn got a buy-out bid from Microsoft, you saw analysts on CNBC telling you that Twitter was likely to get a bid. Well, there couldn't be two companies that are more different. Twitter, 144 character way to say what's ever on your mind. In case of politicians, they've got a lot on their minds apparently. LinkedIn, a very valuable networking and employment site. So what Chaikin does is when the dynamic duo is weak, as it was with Kinder Morgan, McDonald's, and now with Twitter, avoid the stock. Let someone else bottom fish. And sure enough, even though the stock was moving up, you're down 2.5% on a down day. You don't need those headaches. You don't need the sleepless nights. Now here's another example of the dynamic duo on the downside. SunEdison, one of the shining lights in the solar energy business, no pun intended. Power gauge turned bearish in mid-July. It started underperforming the market. Even before that, look at the Chaikin money flow. It was red, not green, as the stock was making a new high above 30. Merrill Lynch was bullish on this stock and stayed bullish all the way down to $3 a share when they put out a sell recommendation. It's criminal to ride a stock from 30 to 3 and then ultimately they file for bankruptcy. Yet a bearish personality change here in July. The market agreeing with the model, there's your dynamic duo. You can avoid these disasters if you follow the discipline. Now there's a stock where Merrill is recommending it all the way down. And I'm not faulting Merrill here. All of Wall Street does this. Analysts are stubborn. Investors are stubborn. So was I before I developed this methodology. We were out at an options conference sponsored by the Council of the Options Industry Council. Options Play also exhibited there as we did. And someone came up to me from Merrill Lynch. This was in California. Ironically, they're from Philadelphia. And they said, I'm an advisor with Merrill Lynch, and I started buying SunEdison for my clients at 15 on the way down from 30 because Merrill was still bullish on it. And if I had been using Chaikin, I would have saved myself a lot of money and pain to my clients as well. Well, there's a stock that's very much like SunEdison. It's called Solar City. Guess what? Merrill Lynch has a recommendation on it. Do you think it's a buy or a sell? If you think it's a sell, type a big S in the question box, please. And everybody who typed S is getting it because the brokerage firms stay at the party way too long. Merrill Lynch still has a buy recommendation on Solar City. And along the way, it's given us our ideal sell setups with everything lined up. Power gauge, money flow, relative strength, all bearish. A signal ahead of earnings, sell signal. Now, Solar City is hanging up here around 25 because it's one of Elon Musk's promotions. Elon Musk is all over CNBC right now. The SEC is investigating Tesla, according to the Wall Street Journal, for securities violations. So what did Elon Musk do 2 weeks ago, 3 weeks ago? He had Tesla make a bid for Solar City. Without that bid, this stock would be on the verge of bankruptcy, in my opinion. Very much like Sun Edison. But look at the money flow. The institutions aren't even buying this. And when you look at a chart like Tesla, and I'm giving you a preview here of our new intraday capability that will roll out at the end of July. We roll out new releases at the end of every month with new functionality like clockwork. We had an earnings release. Now we've got an intraday at the end of July. So what does that mean to you? Well, when Tesla is up 9 points, as it was earlier today, you'll see that bar dynamically updating, which has not been the case. And you'll be able to click on one day and see the intraday bar with volume alert. So earlier today, Tesla was up 9 points, 226. We had a sell signal coming in. This was an overbought sell. And we call this the ideal setup. Power gauge is bearish. This is from our development environment, so not all the data is correct. It's underperforming the market. Money flow is negative, and you have a sell signal and a big up day. It's the perfect setup because look at the top. The analysts are lowering their estimates on Tesla. And now Tesla is being investigated by the SEC according to the Wall Street Journal. Elon Musk, I've been calling him the P.T. Barnum of the 21st century. Drive the car, sell the stock. It's a great car. We all know that. Electric cars are the wave of the future. We don't want to burn fossil fuels. This man is a promoter. He's hurting his investors, and the SEC has finally caught on to him. They don't deliver as many cars as they tell you they're going to deliver. He's acknowledged that he was overly optimistic and maybe carried away with himself. Jim Cramer has put him on his wall of shame as of 6 months ago, not just recently. The stock periodically has big rallies. Don't get sucked into them. These are those momentum plays where you're on a high wire. Use the ideal setup to short the stock. The stock is trading down now at 221. It was 225 earlier. If this investigation is true, I can tell you from 50 years of Wall Street experience, when the SEC gets their hooks into you, they don't give up. So if there are securities law violations here, this company's got problems over and above the fact that they're burning cash every quarter. Hundreds and hundreds of dollars of losses. They need new financing, and in the middle of that, they're making a bid for Solar City, which has incredible debt, all these receivables on their balance sheet and offloaded. These are stocks you need to be avoiding, folks. If you're in these stocks, good luck to you. I wish you the best, but this is what I've told our support and salespeople. Tell people, drive the car, avoid the stock. So another example of the dynamic duo. Now, another quote from Warren Buffett sort of summarizes the balance of the presentation. They don't call balls and strikes on Wall Street, so you don't have to swing at every pitch. You can wait for your pitch. I call that the fat pitch or the ideal setup. So here's some examples of the ideal setup in action. Here's a small cap stock. We saw quad graphics earlier. Central Garden, a bullish setup right there, oversold, money flow positive, relative strength strong, power gauge bullish. Why do I use this? Because my wife Sandy bought this stock. Now, if Sandy can do it, you can do it. And notice what happened. It spiked up here in early June. Why did it spike up? Well, we couldn't even find that for 2 days. It turns out that SunTrust Banks, a stock we're going to look at in a minute as a bullish stock in the financial group, changed their rating on Centa, which is not very well known in the investment community, from neutral to buy. Their buying caused the stock to jump up 15%. What did Sandy do? She used that spike to take her profit. You can use the upper band and these periodic gifts from the gods to enhance your trading and your options activity. Now, here's a stock called Cavium, which is a semiconductor stock that Joe Bacella featured in his biweekly subscriber sections as a bearish stock. Based on those sell signals, the fact that the power gauge was bearish, underperforming the market with negative money flow, Joe pointed this out as a classic example of a bearish stock where you could take advantage of the methodology, buy puts, short the stock. And why did the stock break down from 47 to 37? Because they announced an acquisition of QLogic's, totally out of their wheelhouse, desperate to diversify. And Cavium has now rallied up again. And we initially got a testimonial from Chris Lanham, who said, "Today I made my biggest profit, 150% from buying put options on Cavion a few days earlier." That was based on Joe's session for our subscribers in early June. Now, there's an opportunity right now using the options play idea screen that Tony was showing you earlier to do a vertical put spread, because Cavium has rallied from 37 to about 41. And you could do a vertical put spread with an August 19th expiration, buying the 41 put and selling the 34 put. If it trades down below 35, you could make almost a 200% return. You're reducing your risk a bit. You're only paying $235 versus buying the put outright at 280. This is what a combination of two disciplines can do for you. Now, the classic example of how we've helped people make money with options play and Chaikin is Chipotle, a formerly high-flying food chain, fast food, Mexican food chain, spun out of McDonald's, ironically, about 5 years ago. Power gauge turned bearish in mid-October. It started underperforming the market. About 2 weeks later, that's where the red arrows are. Along the way, many opportunities to buy put options. There were other signals that triggered in that 550 area. But back in March, we actually made this our bearish stock of the week. And when the stock rallied up, there were great put spread opportunities, and we featured them in a couple of webinars. Now, in May, the stock rallied from about 410 all the way up to 453. And in a webinar that we did in May, very early in May, we featured this put spread on the left. Stock was 453. Options play was suggesting a vertical put spread, the 455 long, the 420 short, with a July 8th expiration. That was my birthday. Just came and went on Friday. And guess what? You pay $1,280 for that put spread to control $45,000 worth of stock on the downside. That's what options can do for you if you use them intelligently. Your total risk in being short 100 shares of Chipotle was $1,280, less than 3% of the cost of the stock. And as the stock traded down under 400, that put spread widened out and you almost tripled your money. As of a couple of weeks ago, the spread had widened out to $3,400 from $1,280. A really nice profit in that put spread. But the discipline of Chaikin and options play is what made that all possible. And this stock can barely make it above 400 even on a big up day with the market making new highs. You don't want to bottom fish. The industry is weak. McDonald's clearly weak. One of the only bright lights is Jack in the Box. Technicals are weak. These are the stocks you need to avoid. So what is the ideal setup in earnings season? Well, first of all, earnings season has spooked a lot of people because stocks are volatile during earnings season. So you should be cautious. But volatility, as we've seen in the Brexit examples, equals opportunity. There's a lot of speculation in the media surrounding earnings reports. See it on CNBC all the time and in the newspapers. Therefore, there's volatility. Everybody wants to know if a stock will meet expectations, beat them, or disappoint. The power gauge can be your GPS during earnings season. Stocks with a bullish power gauge rating are twice as likely to report a positive earnings surprise as the average stock, and stocks with a bearish power gauge rating are twice as likely to report a negative earnings surprise. And remember, they come in bunches. So you can find winning options trades and options play to take advantage of volatility during earnings season. And here are some examples of that. Atmos Energy is a utility gas distribution company. Wouldn't you have loved to have been in this stock? And we've used this over and over again as examples in webinars over the last year. Power gauge bullish, outperforming the market. So the market is agreeing with the model. Money flow, the institutions are still buying the stock. It's gone from the low 50s to the early 80s. And along the way, you had these ideal setups, which typically came ahead of positive earnings surprises. And each time you pulled the trigger, and part of what we're trying to preach here is this discipline methodology gives you the confidence to pull the trigger. Because if you've done all the work and you found the right options trade and you just sit there and watch it and don't pull the trigger, you're not doing yourself or your trading account any favors. Confidence comes from believing in a discipline and using it over and over and over again. Now, Netflix is a stock that we've really been bearish on based on the power gauge for almost a year. Had a big rally in that period, has periodic rallies, but where you see that big red triangle, we put out a sell recommendation ahead of the April earnings report. Now, we see from the top of the screen, Netflix is due to report earnings in mid-July. They're going to talk about how Brexit is a problem for them because their subscriber growth in the US is declining, and they've been trying to make that up by expanding their footprint in Europe, particularly in the United Kingdom. So anything that creates uncertainty with the UK is not good for Netflix. But you don't have to know all this. This is another example of our new earnings functionality. So earlier today, Netflix was down 7.7%. It finished down over 2.5 points on an up day in the market. And look at the red bar at the right hand of the screen. That's our dynamically updating bar in beta testing that's going to be released in late July. So you have an ideal setup here. Overbought, negative money flow, underperforming the market, bearish power gauge, earnings coming up, great spot to buy. Put options, I know when we give the mic back to Tony, he'll give you a very quick recap of a Netflix put trade. But this has happened before. Netflix in 2014, we were on record before they split 7-for-1, telling people to get out of Netflix ahead of that earnings report. It dropped over 100 points, and we got this testimonial. Quick $21,500 profit, added Chaikin Analytics to my resources using the upcoming earnings ideas in Chaikin. Netflix had a bearish rating. This person bought 3 put contracts at 22.20, sold them at 93.90. Using options play, you could have found a similar profitable put trade. Now, if you want to be in a media stock, buy Comcast on a dip. Comcast has had a bullish power gauge rating off and on since February. Last earnings report was a positive earnings surprise. The Olympics are coming up Wednesday, July 20th. And you had the ideal setup on the Brexit sell-off down to the lower volatility band. Stock ticked at about 6.37. That's the ideal setup. That's Warren Buffett's fat pitch. Wait for the ideal setup. Want to be a Netflix? Yes. Now you don't Comcast up here. It's way overextended. Wait for a pullback. Wait for a 3 to 5 day pullback. And then if you want to be in a media stock, don't mess around with Netflix based on the power gauge. You should be in Comcast instead. And we got this testimonial from Torsten in early June, 400% return in 2 weeks. After 2 weeks of using Chaikin Analytics, I have to say the trades I found with the system were really impressive. AMD call with a 400% return or a Google put spread with 100%. It's the first tool I've used that delivers what's promised. Now, what's interesting here is that I've never mentioned AMD in my weekly market letter. I don't think John Schlitz has in his daily letter. The Google put spread, Torsten found this using options play and Chaikin. You can do that too. Now, today I got a phone call from Evelyn Chang at CNBC, who writes their market column for CNBC.com, and she said, Mark, I'm doing a piece on the financial stocks. What do you think of the banks here? Because the financials have really been lagging the market. And then I looked at the power gauge ratings, and I said, well, most of the power gauge ratings for the major banks, which are due to report later this week, like JP Morgan Chase, Bank of America, Citicorp, Wells Fargo, are neutral. But there are two financial stocks that I like here. One of them is SunTrust. Why? Because it's a regional bank based in Florida. Remember, SunTrust is the one who upgraded their rating on Center Garden and pushed the stock up 15% in a day. But SunTrust has a bullish power gauge rating. Money flow is positive. It's outperforming the market. They're due to report on July 22nd. So you've got a comfortable 2 weeks until they report, and we just got a reversal buy based on Friday's price action. And when I took this chart this morning, the stock was up 1.23%. So I told Evelyn I was bullish on SunTrust and also on Morgan Stanley. Why? Because Morgan Stanley's trading below book value. Now, price to book is one of the 20 factors in Chaikin, and when investment banks or banks in general are selling below book value, particularly in a period now where loan losses are minimal, the energy patches calm down because crude oil has rallied, buying a stock below book value with a quality business like Morgan Stanley can be a good thing. Now, this isn't your ideal setup. Relative strength is negative, money flow is just now turning positive, but based on the bullish power gauge rating and the fact that Morgan Stanley is trading below book value due to report on July 20th, I said to Evelyn, this is one of the two financials that I would buy. And I think, Joe, let's turn it back to Tony, because he's going to give us some options play strategies, I think, on Netflix and Morgan Stanley.
Thank you. You guys can see my screen now, right?
Hey, yes, you're good to go. Yeah.
Great. Okay, so I'm going to bring up Morgan Stanley since that was the last one we just covered. As we just went through all the reasons why we're looking at Morgan Stanley, if you're interested in looking at how to parlay this into an option strategy, well, all we have to do is click on the options button here in the upper right to launch options play. And because Morgan Stanley has a bullish rating, what we're going to automatically present to you is 3 bullish strategies. Just like before, just now we're looking at bullish strategies as opposed to bearish strategies. So as you can see, what we're going to present now is buying 100 shares of the stock. So for those of you who have never traded an option, this is the strategy you're most familiar with. And then we're going to be looking at buying a call option, which is the simplest of option strategies. And lastly, a call vertical as an optimized strategy, so that instead of paying $131 for just a call, what we're doing is by trading this call vertical, we're reducing the cost of that call from $131 to $111. So we're saving about 15% or so on your overall cost for buying an option to take advantage of this stock moving to the upside. So again, you use this tool the same way we did before on McDonald's to scan for bullish opportunity. As you can see immediately, we have a strategy here that has a high options play score of 102. So all I want to do is point out if this is the strategy you've honed in on and this is the strategy you want to trade, once you click on the trade button, there is one actual last step of validation that I highly recommend, especially if you're new to options. Click on that trade button, use the strategy checklist that we've created for you that just gives you a last step of validation to make sure that you understand all the risks that you're taking with an option strategy. It's very easy that when we're trading options to overlook some of the minor details, such as earnings dates, spread and liquidity. These are certain things that, especially if you're new to options trading, you might not know to look for. So keep in mind that whenever you're interested in a particular strategy, click on the trade button. What we're going to bring up is a strategy checklist just to make sure that you understand that you've gotten all the data points that you need or that you should be looking at prior to placing a trade. And we have the same thing for income strategies as well. Click on the trade button, and we'll show you a strategy checklist that's suitable for income strategy. So that covers Morgan Stanley, which is more of a trade that we were looking at for bullish strategies. The other one we were looking at was Netflix, right?
Netflix from the bearish side. Yep.
So we're going to take a look at bearish Netflix on the bearish side. We're going to look at this in a slightly different tone from the perspective of this is almost like an earnings play, right? Because we have earnings coming up on July 18th, next Monday. So one of the things that we can point out is using this P&L simulator to simulate what happens after an earnings report. So as you can see, we can simulate any target price that we think the stock's going to go to, but we can also say what happens if it does it by a specific date. So we can choose the date right after earnings. So let's say we choose the 18th of July, and let's say we think the stock's going to go down to $80 or $85, whatever the scenario you may have. What this now does is it simulates what each one of these three strategies will do depending on how the stock performs right after earnings. So as you can see here, I have what happens if this stock, and Netflix is trading at around 95 right now, I believe. Yeah, 95 right now. So what if the stock jumps down 10 points right after earnings? As you can see, now I have this middle strategy buying a put, giving me the highest return, 81% return versus a 77% return on the put vertical. So this now allows you to use this tool not only to find strategies if you think the stock's going to go in a certain specific direction without a time frame in mind, but if you do have a time frame in mind, especially when it comes to earnings seasons, you can use this tool, use the P&L simulator to simulate what happens immediately after the earnings release, because a lot of times when you're playing earnings, you want to take off this trade or close the trade right after the earnings release. So you can use this tool to model what happens if the stock does go down, let's say 10 points on earnings. And for those of you who have traded around earnings, you might know that volatility also tends to come lower right after earnings, so you can even assume what happens if volatility goes a little lower. So as you can see, if volatility actually goes a little lower right after earnings, this is still telling me that the put spread gives me the highest return compared on these three strategies. So you can use the P&L simulator to also play earnings plays, which is extremely powerful because this allows you to take a limited risk play, because if Netflix beats earnings and shoots up to 120, 130, no matter what, you cannot lose more than what you paid for on the put. So for example, if the stock shoots up to 110, I'm limited in my losses to what I paid for in this particular scenario. So here I can lose $444 or $595 on these put spreads because my risk is limited. But it gives me the downside so that if the stock does shoot down lower to, let's say, 85 or 80, I get to take advantage of that upside. So that's
Tony, thank you very much for that. That really is powerful stuff, folks. That's how I use options play because I ran an options department for 5 years for a big brokerage firm, so I'm a little more comfortable with the advanced features. But we try to show you that this is for everybody from new options traders to very sophisticated options trader. The key being it saves you time, it puts the probabilities on your side. So Joe, if you would give me back control, I'm going to wrap up the webinar. I know we've covered a lot of stuff today, but we've got a really special offer for you, so stay with us just one more minute, and I think you're going to be very, very pleased with what we have to wrap up the webinar. So here's that Morgan Stanley slide. Big news at Chaikin Analytics is that in addition to the earnings alerts, which were rolled out 2 months ago, at the end of this month, intraday bar and chart coming soon. So here's an example of the earnings pop-up that we didn't show you. Tiffany's, weak stock, classic bear, has been for over a year. I won't get into that in depth because you've seen it. But the earnings trend factor is bearish. That's the red exclamation point at the top of the chart. I drilled down to get the details. They don't report earnings till the 25th. By the way, going back to Netflix, I don't know if this quarter is going to be a disappointment or not. The power gauge is saying yes. The action of the stock is saying yes. What's going on in the UK is saying yes. But what I can tell you is that for the last 4 years, Netflix October earnings report has been a total disaster. They've had a negative earnings surprise every year for the last 4 years in October. Likely it is there'll be a negative earnings surprise here coming up in late July, but I can promise you that based on probabilities, there's a trade to be had in October wherever Netflix is trading. But here's the intraday bar and the pop-up, and I picked a stock that had a big down move today. It happened to have had a bullish power gauge going into today. Leidos Holdings, aerospace, just like Huntington Ingress. Look at that big red bar. Prior to this release coming up at the end of July, you didn't see that. You saw it at the top, down 7%. Now you see it on the chart, and you can relate it to the bands. And then we've highlighted a heavy volume alert, and that was the intraday action through midday today through 12 noon. So new functionality coming that we think is really powerful for options traders. You won't have to go running back to Thinkorswim or Schwab or any of the other options platforms like Merrill Edge or Raymond James. To see this, it's all going to be on the Chaikin chart. So now you know the keys to trading options like an expert. Tony's an expert. I used to be. I'm now spread across the map, but I understand options pretty well. And I want to make you a special offer. Chaikin Analytics now includes stock screener, options play, earning alerts, and now intraday charts coming. We got this testimonial back in November when we integrated options play. I'm writing to tell you how absolutely incredible Chaikin Analytics become. It started great, but with the options play and screener additions, I feel it's absolutely the best product on the market. I've recommended your product to all my investing friends. Doesn't get any better than this. So Chaikin Analytics for iPad and desktop, normally $1,950 a year. As a webinar special, good through Thursday, July 14th, we're reducing the price by $200 to $1,750. Go to chaikinanalytics.com/options. That discount will be pre-populated, or call 877-697-6783 or email sales@chaikinanalytics.com. But if you go to the website, you can immediately subscribe. You can be on one of Joe Bocella's onboarding sessions, and I'm going to give you a special offer where Tony Zhang is going to go in depth with Joe on our new Options Academy this coming Monday. So what do you get with Chaikin Analytics in addition to everything we've been looking at? Well, you get my weekly Market Insights newsletter, and you can go back and check and see that we've been bullish in the main since third week in February. We've preached calm and not panic in the Brexit scenario, and we've been talking about new highs in the market, and now we've upped our targets for the year to 2,200, 2,250 based on the breakout, and we may even go beyond that. You get small group tutorials and options courses to help you learn all the features and functionality of Chaikin Analytics and why you need to master them so you can get up and running quickly. We have new sector analytics, which enable you to look at ETFs, indexes, sectors, rank them in any time framework, see what's working, what's not working, where the action is. And my colleague John Schlitz's Daily Morning Insights. John used to work with hedge funds for me, my old company, and at Lehman Brothers, on a daily basis, feeding them ideas, answering their questions, analyzing the markets. He's a pro's pro. He's one of the best market technicians on the planet. You hear a lot about Ralph Alcampora, the Dean of Technical Analysis. I'll put John up against Ralph Alcampora any day because he's proven himself 20 years of a relationship with me. So we got this testimonial, final one, 10x return in 5 days. In the 5 business days I've been using Chaikin Analytics, I've paid for the subscription over 10-fold. These initial results are nothing short of astounding. Please extend my thanks to the entire Chaikin team. And believe me, this is a team effort. I started Chaikin Analytics 6 years ago. It was myself and Sandy. We're now 25 people. Sales, support, onboarding, marketing. It's a team effort. Technology is rock solid thanks to our powerful technology team. Joe Bacella, Michelle do the onboarding. We're adding a new support person shortly because people have said we want more of that. And to make this even more exciting for you, more affordable, to encourage you to take advantage of this great functionality as a fast action bonus, if you subscribe by midnight tonight, we'll take an additional $100 off the price of Chaikin Analytics, reducing the cost to $1,650 for a year subscription. ChaikinAnalytics.com/options. And I promised you a special bonus. Joe Bacella has put together a paid educational program called the Chaikin Options Academy. It's a 4-hour intensive session. Tony Zhang has been a guest speaker. I've been a guest speaker. The next session is this coming Monday. If you sign up tonight, that educational section is normally $799. We'll take $300 off the cost of the educational module. You'll hear Joe, you'll hear Tony Zhang, who's been kind enough to be a guest lecturer, and you'll save $300 on the Chaikin subscription and an additional $300 on the Options Trading Academy educational session. It's very valuable. People have come away from that thanking Joe, thanking me for putting that together. So that's our fast action bonus, but you've got to subscribe by midnight tonight to get those two bonuses, the additional $100 off and $300 off the normal price of the Chaikin Options Academy. So with that, I'd like to thank our partner Tony Zhang for creating Options Play and for participating in these webinars, Joe Bacella for putting them together, Michelle, the whole team, Chris, who make sure the technology gets sorted out when we have glitches, and thank you all for staying with us for this intense educational session. And with that, back to you, Joe, to wrap it up.
Awesome. Well, Marc and Tony, thank you so much for your time tonight. Marc mentioned that we have our subscriber sessions taking place all throughout the week. Tomorrow we host our twice a week options session at 11 o'clock Eastern time. So again, if you take advantage of Marc's deal, we'll get you in the door at $1,650 for a full year to Chaikin Analytics. You'll have immediate access to our platform. And then of course, we'll get you registered for tomorrow's 11 o'clock walkthrough of our Options Play program. So we'll get you hitting the ground running. And then of course, there'd be no better honor for me than to have you attend my options class starting on Monday. So again, but that is only if you subscribe by midnight tonight. So with that said, go ahead and check out our website, chaikinanalytics.com/options. You can give us a call at 877-697-6783. So with that said, on behalf of everybody, have a great evening, and we'll see you tomorrow.